So I'm gonna be talking about top-down analysis, guys. You know, top-down analysis, I don't want to say it's a retail term, because we obviously use it in smart money as well. But when I, in my head, think of top-down analysis, this is something that first, a lot of people still think of retail when it comes to it, when they say, you know, they're trading support and resistance and they want to see how many times a certain resistance zone is respected. So, and then they take this all the way down to the smaller time frames and stuff like that. So, I mean, that is a style of top-down analysis for retailers, but I just kind of want to show you guys where you would use top-down analysis in smart money. So this, any general questions on top-down analysis before I start? So I probably won't open the chat box for a second. Okay, cool. Okay, so the only real reason you should use top-down analysis is for structure / order flow. I don't like to say trend because I just don't like that word, because the word trend is subjective to time frame, right? I feel like people say, oh, trend is your up and down. Like, you can't just buy off a trend line. Just buying when it hits stop loss randomly below where, like, you would have got stopped out here maybe. Trend lines, they don't really make sense. So I like to call it structure, order flow, whatever you want to call it. So now a lot of people actually struggle with structure, not trend, not top down, it's structure. Okay, because a lot of people get on whatever time frame they are on, and if they zoom in and they stop right here, let's just say we got on a lower time frame. A lot of people log onto their computers and be like, oh, downtrend, right? High, low, low, whatever this is. Something like, I don't even know how to do trend lines, to be honest, right? And then they try to sell and say the market is bullish or bearish, sorry, right? So the issue is overall time frame. So let's go back up to the high time frame. Okay, so structure. So what you need to do is start marking up structure. So this is my high, my low. Let me change the color for you guys. High, low, bunch of high lows in there. Coronavirus. Okay, so coronavirus was our last high. Okay, so in order to show that structure is changing around, it needs to break this new high. Okay, so as soon as price breaks this new high and starts retracing, right, and then goes up and makes another high, well, the last low that we have between this break and the new high is the new low that's maintaining this bullish structure. Okay, I'll try to explain that again. And this is why everyone who's on this call needs to go purchase TradingView and use replay mode, because if you're not using replay mode, you're not practicing in real time, right? Everyone's like, oh, I can find a backtesting, but not in real time. It's because you're not practicing with replay mode to replay what the scenario is like in real time at that time. Okay, hopefully that makes sense. Okay, so once we have this, okay, so we break this high, break, we retrace, and then price starts playing out again. Okay, so once we break this structure, this shows us this was the new maintaining low for this structure right here. Okay, a lot of times, a lot of people are counting a lot of smaller structure and having a lot of random bias that doesn't make sense. Okay, So let me play it a little bit. So for example, once we get here, we have the same thing, right? Let me play this a little bit. We have this break of this structure, okay? So this is gonna show us that we're still bullish, guys. We're still looking for buys, right? We're not calculating this on smaller time frames for sells. Okay, so after this, we're also still looking for buys as long as we don't go below this point for a break of structure. Now let me go down to a 4-hour time frame. So I know right now it's looking pretty messy, but I just want to show you guys what it looks like on the higher time frame. Okay, so in this whole scenario, guys, we should be looking for buys until we get below this low. Oops. Okay, so let me go down to the 1 hour in this particular scenario. I try to mark this up, guys, so you guys can see opportunities. So now we're going to look for opportunities at the bottom and top of the range. Okay, so if you choose to look at this at a higher time frame perspective and you are going to counter trend trade, right? You just want to be aware of where you're going to exit because your take profit isn't going to be down here. And this is where people have a lot of trouble. Like I feel like a lot of people have trouble with their take profit more than anything. The market reverses because their take profit doesn't make sense, right? So if we're in a bullish market, can you sell? Yeah, you can, right? Just don't drag your take profit all the way down here in a bullish market, wherever you want to do it, right? Because it's not gonna, it may not smash, right? So a lot of people ask, like, do I trade with the trend? Yes, but if I find an opportunity in here on the 5 minute, if I'm on the 1 hour and I'm watching this pullback and I haven't broken any higher highs and I'm getting lower lows, then I will sell it. Okay, so this is why it's not about higher time frame bias. You don't have to carry this bias with the rest for the whole week or the whole month. A lot of people will be like, oh, AU was bullish for the next 10 years of my life because it's been going up for 5. Like, doesn't matter. Just be aware of your take profits and where you're getting out, right? Don't hold partials in a bullish market, depending on the time frame. Does that make sense? Does anyone have any questions so far? Let me get the chat box open. So this is why I call it structure or order flow, because trend doesn't make sense to me. There's no such thing as trend. It's going down and it's going up. If I go to a smaller time frame, this down is up. It's not about trend. It's about structure and when to get in and get out if you're on the opposite side of the trade. Okay, so we entered this. I'm here real time, watching us go up, watching us go down. Great. Watching us go up again. We break this high. Okay, cool. We're getting new highs. Okay, cool. Well, once we start getting new highs, right? Because we break this high, we get new highs. Anything after technically shouldn't go below our first low. Okay. So technically, if I start seeing retracement, can I sell in here? Can I sell in here? If I really, really want to, yeah, on the lower time frame. Again, my take profit just can't be down here or down here because it's not realistic. My take profit would have to be at least at these equal lows if I was trying to find a sell in here. And the squad sees me counter trend trade all the time, and I get out at my exact take profits. I just get out in time, and they're still 1 to 10s. Okay. So now if I'm realistically looking for buys, I don't know if these lines help. They're driving me insane, but it might help you guys. Okay, so market's going down, retracement's happening. Now, let me go to lower time frame. So generally speaking, personally for me, when I get on the chart, I flip-flop to whatever time frame. So I'll start on the 1 hour, go to 30, go to the 4, and then go from wherever. I flip-flop. For me, I like to see what I want to see first, and then I see where that schematic is. Okay, so if I see this buy right here, then I'll flip-flop on higher time frames just to make sure that's the overall structure. And if it's not the overall structure, take profit here. My take profit would be here regardless, right? Little retracement and out. Okay, so this is why I personally say trend doesn't matter, because even if I was in here personally with a 1 to 10, my trade would have been closed here. Because for me, this is the 1 hour. I'm not sitting in here for 3-4 hours for a little retracement. Close 1 to 10, on to the next trade. Okay, because a lot of people ask about swing and holding trades. I mean, it's something that I might start doing. However, again, it's just a 1 to 10. Like the money's there, guys. I don't need a 1 to 67. I don't really need that. Okay. So back to the example though. I believe this point of interest is on the 15. Actually, I believe it's on the, what was it? The 3 or the 7, because I have the 7 there. But unfortunately, because I back tested on such a high time frame, what year are we in? I didn't realize that that's not going to give me data, right? On lower time frames this far back. So that's my bad. But we can still continue with the example. Let me just cut it off here and go to the 15. Okay, so this is maintaining the new low. So once I got these 2 points of interest after the maintaining the low, and this is what, guys, the bottom of the range. I tell you to look for buys and sells at the bottom of the range, right?